Hey guys, my name is Kashif Sheikh and welcome to my YouTube channel. On my channel, I'm going to be discussing the markets, providing recaps, as well as my thoughts and insights on the markets. Over the last few weeks, the markets have been fairly choppy. There's been quite a lot of volatility and some portfolios have really suffered. I've been getting a lot of questions from friends asking me what's going on and all sorts of questions along those lines. So I thought I'd make a short video providing a bit of an explanation and a summary of the markets over the past few weeks. The SPY ETF from the recent highs is down just a little over 2.2%, while the Nasdaq is down about 8.3%, and the Dow Jones is slightly positive at 0.1% over the same time period. All the price action over the last few weeks is very normal. The broader markets haven't moved much. Typically, we do see moderate corrections of around 10% plus once or twice every year. This correction is very interesting because of the divergence between different sectors and different indices. And I'll talk about that a little bit. Obviously, some of the higher beta stocks have gotten crushed and have corrected a lot more. The EV sector in particular has really suffered, as have SPACs. CCIV, which announced a deal with Lucid Motors, is down almost 60% from its January highs. It's obviously difficult for those holding the stock. Unfortunately, the EV sector is highly correlated at the moment in terms of stock price. So with Tesla and NIO in free fall down about 33% and 43% respectively. This makes the broad recent downturn in the EV sector unsurprising. Tesla and NIO are two of the more well-established players in the EV sector, and generally as they go, so goes the EV sector. Whenever there is a bit of a correction, typically the more volatile investments will underperform the broader markets. So all of what we've seen in the markets over the last few weeks is highly normal. This correction hasn't been a particularly large one thus far, if we look at the major indices. We will be watching the markets very closely, however, in the coming weeks. This correction really is interesting because some sectors really have gotten hit, like the technology, genomics, and other high growth sectors, as well as a lot of stocks that benefited from the COVID-19 pandemic. Other stocks have been doing relatively well during the correction, however, like the financials and energy stocks, as have companies in the sectors that benefit from reopening, specifically travel and leisure. Carnival, Air Canada, to name a few. These companies are likely to benefit from the pent-up demand for travel with the vaccines on their way. In fact, XLE, an ETF that represents the energy sector, is up 18.5% since the correction started, while XLF, an ETF that represents the financial services sector, is up just a shade under 7%. This divergence really is interesting, and it isn't just brought on by the short-term sector rotation, but it's also a result of the rapid increase in Treasury yields, which is up almost 70% since the start of 2021, and just under 33% over the last month. This rapid rise in Treasury yields was the big reason for the especially violent sell-off in the more volatile or more speculative growth stocks. When borrowing costs rise, stocks that aren't profitable underperform because debt financing costs rise, which puts a lot of pressure on companies that are heavily dependent on capital markets for operations. Improved employment trends in the weekly unemployment report came out to be better than expected, which actually increased the sell-off because it caused a further spike in yields of roughly 5.4%. The market is selling off of inflation worries at the moment, as Jerome Powell didn't stave off inflation concerns. He indicated on Thursday that the central bank wouldn't take measures immediately to conquer inflationary pressures. So that's all very interesting. But what's the significance of everything that's going on? For myself, it means that the trade that I continue to like at the moment is the reopening trade. I think there is a lot of momentum with the multitude of vaccines and treatments, which leads me to think that the reopening trade will do very well over the next year to year and a half. For myself, it's more about diversifying my portfolio for the next little while. That being said, I have a long-term horizon. So the vast majority of my portfolio is still invested in the companies that I like, in the longer-term leaders that I have been invested in for a long time. The pandemic hasn't changed the companies that are going to be winners in the sectors that have high levels of secular growth going forward. So I don't plan to change too much of what I currently have been doing. For the most part, I do continue to hold my favorite high-quality companies such as Microsoft, Amazon, Roku, and also do diversify a little bit and try to play in the growth sectors, marijuana being one of them with some US MSOs, Curaleaf, True Leave, Green Thumb, and then with Canadian LPs, I do like Tilray, especially with their merger with Afrio. Hey guys, so this video is for educational and informational purposes only. Please do your due diligence. This isn't financial advice. So that's pretty much it for my video today. I hope you guys enjoyed it. I hope it was informative, a little bit educational and entertaining for you guys. If you guys did like the video, please feel free to like the video, subscribe to my channel. I do plan to release a lot of great content in the future, and I would love to get your guys' opinions on what you would like me to talk about.